Welcome to TheoTrade. This is Don Kaufman. Here we are. It's November 6, 2017. Before we get directly to some of the market action, a very special announcement. What you're looking at on the screen right here is known as an auto expected move indicator. This is something that we've talked about kind of week in and week out here at TheoTrade. Ultimately, okay, on a general basis, I've been coming in here and I've been hand drawing expected moves on a week-to-week basis in products like the SPX, in products like the Nasdaq 100. Again, we've been hand drawing these expected moves. However, we have a script that is now ready to be imported into the thinkorswim trading application. If I go ahead and switch the symbol over here to the XLF, hit auto expected moves, okay, there we go. This is expected moves now that are automatically drawn, okay, not just forward, but also in regression analysis into, again, of course, the past on any given optionable underlying. Now, we will be giving you this indicator. Join us in a very special presentation. It is this Wednesday, November 8th at 7 p.m. Central Time. This will, of course, be recorded. It's called How Expected Moves Drive Markets. Just go to theotrade.com/EM. Throw that up there again. That is theotrade.com/EM. Not only will we provide the indicator here, the, again, auto EM indicator at absolutely no charge, we'll do some in-depth explanation on really why this is so important inside of today's marketplace, and really how expected moves really do drive market action today. Speaking of which, let's go ahead and let's get to some of today's market action. Again, join us this Wednesday at theotrade.com/EM. Now, over to today's market action. All right, getting to today's market action, let's go ahead and start with the fact that the S&Ps once again are having an astounding move to the upside along with the Nasdaq. Now, time out for just a second. At this point in time, I think whether you're a bull, whether you're a bear, forget about directional bias altogether at this point in time. You know, I'm talking to a lot of traders throughout the course of each and every trading day. And these are traders, some of them, yes, are in the TheoTrade chat room. Some of the traders I talk to are industry veterans, people I've known in this business, you know, for over 20 years. A couple of these people have been in the business for like 40 plus years. All of us are utterly astounded at, simply put, how many up days in a row you can possibly have, whether it's the S&Ps, and that's specifically what we're looking at over here. To get tuned in and turned on, this happens to be a 30-day, 1-hour chart. Again, a little bit of awe in there. Now, taking a look over specifically at the Nasdaq, again, how many up days in a row? But what's more astounding is when you start to look into the internals of this to the marketplace. And what the internals really kind of mean to me, I mean, you can look at any sectors you want. You can look at any number of stocks. Underlyings that are in favor, okay? We'll bring up Microsoft, for example. Underlyings that are in favor are simply being bought. We can look at Microsoft. Clearly, we can look at Apple, okay? We can look at Facebook, all right? We can, of course, look at Amazon over here, and we can go on and on and on and on. Even with Google, which is having a slightly down day. Since when did a slightly down day still looks like a massive uptrend over here? Everything, okay, that is loved is being bought. And underlyings, okay, that have been absolutely pummeled just keep going down. You really have to take a look at underlyings like Verizon today and start to put some perspective on this year to date. Now, okay, to me, this kind of reeks of a little bit of opportunity. Here we actually have Verizon. And again, I'm always looking for opportunity. It's not just, you know, it's not good enough to just be astounded by the fact that each and every day that the market's rallying, okay? What I see in here is, again, underlyings that have already been beaten down. And when I say beaten down, how many down days in a row can you ultimately have? Here's an underlying now that's down almost 17%. Now, this is a year-to-date percentage chart. Nevertheless, Verizon is now over a 5% dividend, okay? And in a situation where we're getting, all right, almost no yield out of like a 10-year, okay? And the bonds are not paying anything. And you also have to recall that over in Europe, even junk bonds in Europe are paying between 2 and 3%. I don't know about you, but Verizon's looking pretty nice. In addition to it, and there's news on this, but you can look at AT&T. It's right there with it. AT&T is almost up to a 6% dividend. Granted, again, big news story about AT&T over here coming off of a rough earnings. It's down, though, almost 24% year to date. I would be much more partial if looking at an investment kind of grade strategy. I'd be a little bit more partial to Verizon kind of in that if I'm going to get married to it for a longer period of time. However, the point being is just that everywhere we look on the screen, asset correlations are just all over the place. And by that, okay, you don't have to look very far. And I was pointing this out again in kind of the weekend video. We've got the bonds straight up. All right, the bonds are up another 18 ticks today. And, you're looking at the markets day in and day out, and you're thinking to yourself, something has got to give here. There has not been a snap in the marketplace, but the bonds really are the big standout as they rally up. You would think that again, it's going to take yields lower, right? That's interest rate lower. You'd think that would snap the back of the financials, okay? But the financials in this period of time when the bonds are exploding higher are completely and utterly flat, okay? Again, everywhere we look, we see beaten down stocks getting hit harder and harder. If you have the word retail kind of stamped on you, okay, the Under Armours out there and so forth, they're just getting beaten down. I mean, when I say everywhere you look in terms of the retailers, from Bed Bath & Beyond, and we've used Bed Bath & Beyond as kind of our marquee underlying of everything that's going against retail right now. Bed Bath & Beyond now down 50% year to date. Okay, here's some of the brighter spots. You start looking at specific brands like Lululemon. It's only down about 8%. Okay, I decided to look at a number of these. So I'm looking at like Under Armour. Well, okay, this is the real loser in the pack, down about 57% year to date. Now, are we sure that some of these brands are going to survive? Yeah, some of these brands are going to survive. The point, though, isn't necessarily to look at these as investments per se, okay? But to get a feel that if and when this market does turn, again, you're starting to look at things like PE ratios and fundamentals, and it doesn't matter. The market doesn't want to touch any of these brands. It's just selling what is completely and utterly being destroyed and continues, okay, to throw caution to the wind and buy the Amazons and buy the Facebooks and buy the Apples. In addition to it, as I mentioned, internals out there in the marketplace, they're not great. Have you looked at things today like advanced decline line? Here's the S&P 500 sector indices. Now, again, Verizon, AT&T are having a bad day, okay? Energy is having an incredibly hot day. It's up about 2% in terms of energy. But this advanced decline line's not great. Take it a little bit further over here. Go look at the S&P 100. The advanced decline line has been sitting negative throughout the course of the day. All we're seeing in the marketplace in recent days, okay, is massive, or what I'm now calling mega market caps being purchased. Your mega market caps, again, it's your Microsofts, it's your Apples, it's your Facebooks, it's your Amazons. Mega market cap, buy them, okay? A lot of the retailers, brands that have just been eaten alive, sell them. And they're selling those and literally rotating capital into the heavy market cap. All right. When will it end over here? One of the signals that I'm looking at specifically, as I showed you, a number of the retailers, if you're starting to look at things like Under Armour and you're starting to look, again, a few of these retailers that have just been eaten alive by the marketplace, okay, if those start to rally, and underlyings like Intel start to turn. I'm bringing up Intel specifically today as it does feel in the short duration that it may have topped. This is, again, one to really keep an eye on. And I keep pointing out just a handful of underlyings. If they start buying Bed Bath & Beyond and, for example, selling some Intel, we've actually got a reversal coming in the markets. Thanks, everybody, for joining us at TheoTrade. Have a wonderful evening. Bye-bye.